This is Andy with QualityStocks. Today's Monday, August 16th, 2010. Today we're going to take a look at DJSP Enterprises. This is a NASDAQ capital market stock trading on ticker DJSP. Candles reveal just a huge drop since back in April, early May, from over $13 to down almost $3. I did no due diligence on this. This is purely a look at the technicals. I'm not sure what spurred this drop or what caused this second gap. You can see two big gaps left unfilled still at this point. Interesting thing to note is the MACD with a pretty nice divergence back towards zero. Actually getting relatively close to it. This is a 6-month chart. See where the histogram is just now starting to break through zero, so we're just now getting across of the signal line. Something to keep an eye on as this see if this trend continues. Another thing to note, this is a second pinch. Second PPO ADX pinch. There's one. This second one is a little bit looser. What's often referred to as an ascending pinch. As the PPO is trending towards zero, we're getting a second pinch formation set up with the ADX. So we always look back at history and how did it do. This pinch was the first one was right in through here from around $5. A bounce up peaking out at $6.64. So an over 30% bounce. On the second one, we're going to look for something similar in nature. Come back and touch base on the candles as to what needs to hold. This money flow is a bit of a concern with the 7-day, this black line. They're coming back down pretty quickly. So we're going to want to keep a definite eye on that. But you can see that the longer terms are starting to get an uptrend to them. And this is where we talk about the separation. It doesn't want to stay far away. So this actually coming back down is a good thing because it's going to put the 7, 14, and 21 all in the same proximity. So we're going to look for this to make another turn and continue the uptrend of these longer terms. Accumulation distribution kind of in the position you'd expect. You know, that was a pretty significant drop back through here. Obviously, there was a lot of selling going on. So the accumulation distribution in a pretty solid downtrend is starting to get a little turn to it right now. And over the last week or so, trying to uptrend back the other way. Something that's a good sign for a possible reversal. Same with shaking money flow, actually getting a little bit of an uptrend to it over the last month. CCI has moved its way out of drastically oversold, holding above negative 100, and a pretty nice look to it with a little curl going on right here. So we're going to look at this break of 50 or negative 50 is starting to get more and more bullish, and obviously looking for the break of zero, but it's in a good position right now. Throw a long line on here for the full still, just to show that it's pretty much bottomed out. Also, you know, almost back down to the bottom right now. Slight little uptrend going on. Plenty of room to make a move to the upside. Tricks, same position. Obviously, this turn's pretty slow, so it's probably not going to be able to hold this line I just put on there. It's actually going to be a little bit more down here. But it has an overall uptrend going on. Look to it. So we're going to look for this to keep trending towards zero. RSIs are moving all together and heading towards 30. We're going to look for this to break out of oversold. Very nice position for the RSIs as well. All these things are giving a hint that this just may try and make a nice bounce here. If nothing else, a temporary one. We're going to look for, from a support level, 320. Undoubtedly needs to hold. That's a bottom support. It's been there, you know, a couple times. We want to see that hold. We don't want to see it go back below it, or it's going to have to wait and set up just a little bit more. Right now, we're looking for 320 to hold. First real level of resistance. It's kind of right in through there. See an area of support, and it's gone up and hit 358 several times recently. So we're going to look for that to fall first. Moving averages are all getting in a pretty nice position. The first real resistance of the moving average is the 20-day. That's still, you know, 15% away. So it can make a nice bounce, even go up to before it hits that 20-day. If it's got some strength by that point, we look for some more volume to come in. 114,000 right now. We'll look for a little bit more volume to push it, and we'll see how it goes to take that on, because that's a second area of resistance. Right up at that $4 area. One, it's the start of where the gap needs to get filled. 20-day moving average and PPS. That's going to be a pretty decent area of resistance. But let's look for this first to knock through this 358 area, 360, and go up and challenge this 20-day moving average. And if some volume is coming in, there's a good chance it'll fill this first gap. Like I say, if this bottom support falls, especially if it gaps down a third time, it's often referred to as a magic third gap. We'll look for a setup at that point, come back and revisit this chart. But right now, let's look for volume, 320 to hold, and 360 to fall, and see if it can challenge these moving averages. A lot of indications that this may indeed try and make that sort of move. Again, this is just my interpretation of the DJSP chart. This is Andy with QualityStocks.